Hi everyone, welcome to Weekly Market Insights from Traderz Hut. I am your RV Raju Angadi Vishwanath, SEBi Registered Research Analyst, Trader, Trainer, and a Transformer. Come, let us have a sneak into the trade setups for the third week of November 2024 from 18th to 25th. 23rd, in fact, from 18th November to 23rd November, what would be the trades, what would be the trend, how to plan your trades, we will discuss today. And I'm going to share the insights how to set apart in this falling market. The trade setup needs to be taken in an objective basis for the Nifty, Bank Nifty, and there is a truncated week again. 20th is an holiday due to the Maharashtra elections, the Wednesday, and from the next day, most of the changes from the National Stock Exchange, NSE has done, the SEBi has done, will come to an effect next month. We would be introduced with almost 45 new F&O stocks, and the index expiries, Bank Nifty expiry is done and dusted. For the weekly basis, only Nifty expiry will be there. The mid cap Nifty and the Nifty also this week are the last expiries. There can be some dilution of the positions due to the weekly expiry getting out. So Nifty can come down to 22,500 is what the support is. But let's see and start with the Nifty analysis. First, I'm going to take a micro view what it is doing. Here it's very simple. This is wave 1, wave 2, wave 3. One more decline for the wave 3 has to come. Then the wave 4 has to come for the fifth wave decline. The final dip maybe which could happen in the Tuesday is what we feel. It would be a volatile market and trends what would be done, and we are going to see the panic trades happening here. Wave 3, one more leg is left is what the charts hint, or even if wave 3 is over, the short term bounce has to be on the cards. The upside, then 23,700 would be revisited and the fall would continue going ahead is what the charts hint. Well, that's what the charts are saying as of now. What needs to be done? Even if a panic dip in the market comes Monday morning, it would be a buying opportunity around 23,390 to 420. If it holds and starts reversing from that zone, the ideal opportunity, contrarily, where you would buy for the next week. Both the sides we have to trade, as it's a trading market. It could be in the form of making a ending diagonal pattern. A, B, C, D, E would come. So somewhat this kind of a move would come here in the markets. So as the charts are hinting the similar kind of a move, we could establish a small fall, then a rise towards 23,480, and then again back towards 23,247. So that would be the wave 3. Wave 3 has to complete in that fashion is what it looks. The steeper the wave 3, where would be the levels to watch out for the wave 3? See, 23,396, 23,311, 23,247 wave 3 can end. 23,390 to 23. I'll just write it up for you. Let's say 23,390 to 23,247, the wave 3 should end. Then the pullback is imminent towards 23,620 to 770 levels, the pullback. Then the fall would again come back towards 23,000 or below 23,000, 22,947 or 22,680 levels could be tested in the next week. So those kind of volatile moves would come in a very shift way. Next week there would be a very volatile week. the rise and the dips would come. What to trade, how to trade the Nifty, well, on a gap down, if it starts reversing, buy the Nifty for some couple of 100 points recovery towards the cost, then again one more dip. So the strategy still remains to be sell on rises. As we see, the wave 3 ends, then the confirmation would come. The break of this trend line would only confirm the wave 4 rise. It should be trend to trend basis where the Elliott waves helps. There are two approaches. The bottom up approach is what which is working beautifully. The trend is down as of now. Even the last 1 hour candle we are seeing. I'm going to show it in that also in Nifty. See, there is not even a single close above the previous day's high, not even a single close from when it started falling. From the 12th November last week, there is not even a single close. 24,250 below, there is no single close above the previous day's high. The hourly candle is showing the clear print and the picture. Even on a 15-minute, the super trend is giving a hint that it's clearly a sell-off is what happening and the trend has not changed. Momentum indicator also is not crossing. RSI is hinting a clear trend change is not there. Still the market trend is weak only. So from overbought, it's oversold, it's trying to bounce, then again the pullback. Well, there will be a good pullback again for a from the oversold territory. If a decline comes on Monday morning, there would be a pullback again. So what are the levels again? The most likely levels are 23,420 to 440. If that also broken, 23,390, 23,320 and 23,247 levels can be tested in a quick way, some 200 250 points. The wave 3 completes, then a strong pullback, a reversal would come of 300 to 500 points. Be ready, and then the wave 5 would resume back down towards 22 600 800 levels for the Nifty to complete the correction. Why 22 600 to what it is? Let us take in a very simplistic manner. I'm not going to complicate the things here. So let us say this is even still a bull market correction. The wave 4 correction is happening of the wave 3. If we assume in that case scenario also, let's set the coordinates. Give me a moment to establish the coordinates. 16913. The start of the bull candle I'm taking. So what we are doing, we are seeing a retracement. 22,700 is just a 38.2 retracement of the wave 4. If at least that would be revisited, so 22,700, that's what the target is. Going ahead is what we feel. Unless we see a big reversal, it's a impulse decline what is going on as of now. Larger degree correction may be happening, but I am taking a micro view. I shared the viewpoint also. Here the dip would be a good opportunity for a pullback. 23 200 to 350 would be an ideal level to hold. Where it holds, one needs to watch out for the pullback of some 350 400 points for the Nifty for the next leg of decline. That's what the charts are hinting as of now. Markets though remains a sell on rise, fourth wave has to trigger, then the fifth sell-off has to start, is what the charts hint on the internal degree. That's how one needs to trade the Nifty. Upside at 23,612, 23,725, and 23,787 are the resistance zones on a pullback where one needs to be cautious and book profits. Only 23,820 to 860 crosses the next levels of 24,200 and 24,500 levels, becomes a important cluster point where the reversal could start occurring in a sharper way. The time it has taken to fall in an equivalent manner in a much faster way, it has to retrace back for a bull market to resume. That's what the charts hint. Maybe from like a scenario occurs 1 or 2 days here or there after the COVID lockdown has happened, market bottomed out maybe 22,700 by the time this week. Could there be a bottom? Don't bottom fish, trade the trend. It can happen. Good fall has come. Then there could be a very good retracement towards 24,500, 22,700, or 22,900, 950 comes. So there would be a good retracement of some 1,500 to 2,000 points. Some stocks are giving that hint also. What about the Bank Nifty? Bank Nifty structure, what it is telling? Bank Nifty, well, it is holding in a range. It's doing well compared to the Nifty. A, B, C could be on the progress. 1, 2, 3, 4, fifth now on the cards. What Bank Nifty is doing, that's 49,200 to 49,500 becomes an important support. 48,900 below, Bank Nifty will get much weaker. So that needs to be addressed very cautiously. Now we are trading in a range 49,900, 50,600, 500 to 600. So either way breakout has to give, more likely it's making a triangle kind of a pattern. It looks to be the double bottom also is not there. It's kind of a triangular pattern after a fall, like A, B, C, D. Now E and E might have also completed, and the fall would start. The next leg would take the Bank Nifty, could take as the Fin Nifty is expected to fall. Bank Nifty can test 49,900 below. We are seeing the levels of 49,200 to 400 levels. Bank Nifty could be visited in the wave 5 forum. That's what the charts hint as of now. What about the Fin Nifty? Well, similar way, like Bank Nifty, Fin Nifty also triangular pattern. It is looking weak. On the structurally, it is looking quite weak. And once we break the lows of last week, the weakness would trigger more sell-off. 23,100 breaks, 90 breaks, 22,500 clearly on the cards for the Fin Nifty. 22,400 to 500 would be clearly on cards for Fin Nifty before any kind of bounce if it has to take. So that's the view on the Fin Nifty, what we are taking, the call we are taking it on the Fin Nifty. Last week, the decline, most of the indices have declined. Nifty, Bank Nifty have declined somewhere around 2%, 2.5% to 2.75%. Rest of the indices, apart from IT, well, mid cap Nifty, PSU banks, all have fallen anywhere between 4 to 5%. Auto index also has fallen some 3.7%. Metals have fallen 5.16%. So there is a good magnitude of fall in the indexes. Overall, the trend is clearly still on the bear side. Small caps also have fallen. Now, will the fall or small caps retreat, or the break of head and shoulder, if it persists, then it's quite dangerous. we could see 13,800 levels in the small cap, or at least 15,100. So what about the mid cap Nifty analysis? I'm going to take the micro view macro structure. We are going to discuss in another video. Let me see the mid cap Nifty. The gap down was eminent. Fifth wave was pending. Mid cap Nifty 11,900 to 840 levels should be tested. Even on the Mondays, yeah, open or gap down, it would be an ideal opportunity. And there again, the consolidation, the pullback may start as the adjustment wave, so that could happen if even it is a leading diagonal fall start of the 5 wave decline, then one more rise would come, else it's wxyz. We have to see what the pattern it is making as per the wave counts. The decline, this one is 5 wave as of now, so 11,941 to, it's very simple, 1, 2, 3, 4, and fifth is due 11,931, 11,838 are the supports. From there, there can be pullback towards 12,000, 12,100 levels as the charts hint as of now. Due to the expiry, final expiry, that adjustments can be done in the mid cap Nifty as well. That's what the charts hint. But there is a clear structural breakdown of head and shoulder pattern, which seems to be 12,245, and the height is 13,400 levels. Like you add 1,200 points from here. If you add 1,200 points, it's 11,000, which is showing the mid cap Nifty targets. So be cautious, trade wisely. If it starts falling, it will create a havoc. Maybe there might be, as I said, if it's a leading diagonal initiation, one ABC correction at least, the stretch of C would come. The C wave could trigger the sell off. We need to watch out on both the cases where the bulls, as of now, the trade I've shared, where the bulls will get a trigger. Where could we start buying? Mid cap select, this is the index what we are trading, so buying only about 12,500 is advisable. The short term averages are also on the downward momentum. As of now, what is the trend? What could test 11,800 holds? The pullback can be there. Good pullback, healthy pullback. uh, these levels, there could be a healthy pullback from these levels, 11,900 to 840 levels. The pullback could be in a strong way, some 600 to 800 points, or 1,000 points. Even a pullback could be there on the retracement if it takes a support in that case scenario. So, as we discussed, the Nifty wave counts, similarly, the mid cap Nifty is poised. That's on the index analysis. What to trade? Fin Nifty puts you buy on Monday's rise, or even at the open, you will get a good opportunity. Once it breaks, the ideal opportunity would be Fin Nifty 22,500 clearly on the cards. Selective banks can fall, even Bank Nifty. We have a view of 49,200 to 400. If it doesn't hold 49,900 below, just take the trade and hold on for shorts. Well, that's on the index analysis. Before going into the commodities or the other stocks, if you like our video, do subscribe to our YouTube channel Traderz Hut, and help us grow and present more information for you. So this is our YouTube channel, our SEBi registered advisors we are, as well as this is our website where you can go through our services. So we have range of services like advisory, live trading room, and exclusive options workshop on an option zeta workshop, where you are going to get a real-time trading strategies to master the options trading, particularly the buying option trading, where most of them lack. We are going to educate you on that, and also Elliott, will come up with Elliott wave courses later part of the system. So that's on us, on our services. The more details you can contact us. There are also information and the link we have shared in the description below. Feel free to contact us. We are ready to help you and groom you as a good trader. So that's a brief about us. Now I'm coming back to the very realistic simple trade setups. I'm coming back now towards the stocks of the week. Bata is the stock which I like to be on a selling side. 1295 below the stock would crack. 1290 to 95 below stock would crack. Realistically, in a big way, the stock can hit 1090 to 1050 levels. The stock looks weak. Even 1200 initial targets are on the cards for the Bata. So that's on the Bata analysis. The charts look weak. So the swing lows are breaking, and even ABC, X ABC could be on making in the stock. So double zigzag is on the cards for the stock. Let me show it to you in a simple manner. So this could be a clear pattern which could be on making for the Bata. So we see, so 1140 to 1190 would be on the cards for the Bata. The other stocks which are on the bearish side this week, which could trigger sell off, is REC. Maybe quite a few of them are bullish, but we are bearish on the stock. Still, the wave counts hint that stock is breaking a triangle. A, B, C, D, E is completed, and a swing low below 500 and 490 below. The stock is headed towards 437 at least. 1 2 3 4, and the fifth is on the cards. The breakdown of the triangle has happened already, as we have drawn it long ago. Now the breakdown has to give the trigger. So that's what is expected in the stock. REC looks weak on the cards, and the break below 490 would clearly confirm the even the bearish head and shoulder pattern along with the triangle. So the sell-off would be immense of some 30 to 40, at least 40 points to 50 points you are going to get on the cards for the REC. What next? In this final dip 22,500 if occurs, what would be the stock to buy in the FinNifty? FinNifty stock, we are watching Chola Finance around 1100 levels, Chola Finance would be an ideal candidate. Chola Finance around 1100 levels would be an ideal candidate for a pullback. I'm not saying that it is extravagantly bullish as of now. There would be a healthy pullback of some 200 points, because the impulse decline what we are seeing is going to end at these levels 1150 to 1160 to 1110. One needs to watch out the stock. 1100 to 1160 could, the stock could be watched. If the dip happens and the decline completes, the retracement would be quite good for the stock, at least towards 1300, some 1320, 1340 levels. So, or even the higher levels, I'm expecting in fact 1400 levels. So 200 250 points of pullback can be there, at least the 5 wave decline which is about to complete. So that's what we feel the Chola Finance would see. So the similar synchronizing we are seeing with the Chola Finance. That's what 1100 to 1150 levels, 160 levels. It could bottom out at those prices. So that's what the charts hint for now. But the trend confirmation has to be given on the completion of the wave 5. So there you can act in a diligent way. That's the three stocks which we have discussed. And one more stock for the week, the large cap IT is doing well, but will it outperform? What will happen? We have to see and watch out. Still, it's not out of the woods. 1830 below, Infosys will get weak. First confirmation below 1850, then 1830 below, Infosys is going to show you the power of head and shoulder. And we are going to see at least a minimum 1670. 1830 below 1670 levels would be clearly on the cards for the Infosys. So watch out these stocks. So that's on the markets front and stocks of the week. Now let's discuss the commodities trends, what it is doing. What commodity one needs to watch out? Silver. Let's see what it is. Let me get into the commodities. Well, there was a good healthy pullback in this copper. Once again, copper if it breaks 780 zones, copper, then 760 could be on the card. 760 broken, copper is getting weak. Until then, it could be it is handling in a range. So that's the view on the copper. What about the silver? MCX silver. Now it's chopping the traders around the panic levels of 86 700 to 87,000. Bottom could be on the cards. So there should be some kind of a pullback, even if it is an impulse decline. So the pullback could be towards 92,200 to 93,100 levels. The pullback tips could be bought until this low is broken. Contrarian bet I'm taking, even if it's impulse decline, the right shoulder has to be coming 92 200 safe exit. One can exit the silver. There is already some 13,000 points fall, so that needs to be observed in the silver. Similar pattern is happening. If this is a corrective advance, what has happened, then the decline can stretch towards 27 to 26.28. So another 10-12% decline to chop the traders out. If first the pullback is there, then ABC correction happens. In that case, it would tend to act accordingly. This corrective decline by a corrective advance, then the impulse, if it is irregular flat kind of a correction, then one needs to observe, because the pattern seems to be overlapping, not a convincing pattern for the silver, even if it has risen. In MCX, it is not overlapping. In international, it's overlapping. Now the fall has started. The breakout channel has been tested. If this channel line holds, then there would be a pullback. That's as simple as that. Crude looks very weak on the charts. Below 5,600, crude is going to see a weak trend for the lower levels. 5,200 or 4,800 levels could be tested in the crude. What about the gold? Gold has pulled back. A strong reversal is seen. Last week we have seen some 4.5% fall in the gold. The time it has taken from 10th October to, let us say, 30th October, 20 days for the rise. The fall from 31st October to 14th November, 15th November, let us say 15 days, it has fallen more than 100%. The pace of fall is big. And one more retracement, 2000, now 2605 becomes a strong resistance, and 605 to 620 becomes a resistance for the gold, and one more leg of decline could be on the cards, even if it is a ABC. So ABC wave could be on the cards. What about the internals of the golds? What it is saying? This leg, although it's falling, it looks to be a corrective. We need to watch out in that sense and act accordingly. So that's on the commodity analysis for now, and we are going to see the global markets. What is Nasdaq doing? Nasdaq reversed. The reversal was seen in the Nasdaq from 21,000. Friday session 2.3% fall in the Nasdaq was seen. So IT stocks may start falling, as I feel the Infi could be the leader if it breaks. So the kind of ending diagonal and the final leg of overlapping could be on a reversal for the Nasdaq. What about DAX? Well, DAX is still holding, but it has to make a head and shoulder, and the reversal should be below 18,900. Now you have to see the Dow Jones. So we are seeing the US markets have reversed a bit, and there is some sell off which is happening in the US markets as well. So it's not out of doubts, markets are showing the trends on a negative zone. What about the metals? Well, some strong reversal has come in the zinc, and then it closed in a negative note, mildly positive, but aluminum has risen in a strong way. That's a brief on the overall commodity analysis and what trends needs to be done. I'm going to tell until the level holds by dips in the silver. What to do with the copper? Avoid copper. It's not clear. I'm not going to take any call. Maybe once we cross 820 levels we can watch out, and 784 levels to 780 levels, until it holds it's okay, else the more fall would come. That's it for now. And also I'd like to add the disclaimer: stock market investments are subject to market risk. Please read the related documents carefully. I may own some of the option positions in the stocks, as I'm a trader too. So please do your own individual analysis or consult your financial advisor while setting up your trades. That's it for now. Signing off for now. Until the next update, your RV. Thank you, everyone.